Hey, what's going on? This is Leo, not a financial advisor, not financial advice. So, we're going to take a look at AMC here. We're on the 1 hour chart, and some of y'all are probably wondering what the heck we're looking at here because this is a completely new count. I decided this morning to really dig in, do a deep dive, and try to figure out what's going on here with AMC. So, today we're going to go over this analysis that's on the chart. We're going to talk a little bit about why I don't trade corrections. So we're going to go over a little bit of trader psychology, try to teach more towards the end. So the reason that I reworked the entire account is somebody had made the comment that if it breaks, I believe it was 33.75, that it was dead. And that's not the case because previously we had a triangle working, right? So we had something like this going on, and we were thinking that we were in a fourth wave triangle, which was forming through here, right? So the break of this trend line wouldn't necessarily be concerning to me. What's concerning is that it's broken and it's hold. Typically, whenever you have a triangle like this and you come towards, this would be the E wave. So in an Elliott wave count, you would have an A, B, C, D, and the E wave, right? So you see decreasing volume across the course of the triangle, which we've been seeing. And then on the E wave, you see a spike in volume, you see a wick through the trend line, and then a quick reversal, and we're moving, right? But we're not seeing that. We're seeing a lingering. So that's leading me to believe that it's very possible that this count we're looking at now is the correct count. So let's go ahead and dig through this and figure out what's going on. So the first part here is going to be an ABC, which gives us a W, okay? So this next part is where it gets a little bit more complicated. And this is part of the reason I say I don't like trading corrections, because they're very complex and they constantly change. So we have a sideways double combo. So what that is within the X wave, right? So this is a failure of the trend to continue, right? So you see a very simple ABC zigzag correction, right? Which gives us a W. And then the trend, meaning when we are moving up, is trying to continue, but it fails. It's what gives us an X wave. So we get an ABC for the W, and then we get an X. Now with the X on a sideways double combo, the X should retrace at least 90%. So that is to say that if you pull from the low here and you're pulling up, you should see it retrace to the 90% level. But it shouldn't it shouldn't break the low more than 2 times the length of your W, if that makes sense. So now what we can do is we can pull up our fib relationship. So we're going to start from the origin of our W, measure out the W, and project from the end of our X wave. And we can see that our Y came just shy of the 618. Okay, that's interesting. That's showing me a little more confluence. It's likely what's going on here. We get a simple little ABC in here for the Y. And now we're on the final zigzag, it appears. This is very clear. 1, 2, 3, 4, 5 down for an A. We get this 3 wave here for a B, right? A, B, C. And now we're working on our C. Another thing that's leading me to believe that this is valid WXY count is that if you start a channel, and this is Elliott wave theory, if you start a channel from the origin of your W drawn through the B, you should see your X wave break the trend channel, which we do see. So that's leading me to have some more confluence that this is the proper count. So where are we? Where are we going? Well, what I've done here is I've measured the length. Now you'll notice I started up here because if you look in the after hours, especially on TD Ameritrade, it's showing the price went up to 77, I believe it was 77.30. So that's why I have my extension starting up higher. So I draw the length of my wave W projected from the X wave. And so the most likely targets here, or your relationships, would be the 618, the 100%, or the 1618. So which one is it, right? Where are we going to stop? Well, the first thing that I'm gonna notice here is these magenta horizontal lines. So these are denoting the low volume nodes on the volume profile. You notice that this is where we bottomed several times. It didn't really test it there. I mean, it came close, but really it was rejected here. So that's leading me to believe there's more support towards the 618 extension. Interesting. Okay. We have another low volume node just below that one. Interesting. So we zoom out a little bit, we can take a look at these computer algorithms, try to figure out where we are in the market. So, just drawing up the first one here, right? So it pulls right back into the golden zone, right? We get a move off of there, right? So this is what I would call a big brother, little brother type setup where you have your larger measured move and then you have a smaller one inside of that, because these computer algorithms, they function like Russian dolls in that there are smaller ones within smaller ones. So I bet we can find one right here if we just pull up. Yeah, look at that. So it goes right into the 50, the golden zone, and then it's off. So that's what I mean. You have a big one, medium one, smaller one. So they operate within one another. So from here, let's see. Okay, so what I've done here is you'll notice that price, right? It shot straight through the target at the negative 236. And what these computer algorithms are programmed to do whenever that happens is to pull from the high to the high of the market, because it's their attempt to catch up with the market whenever it's running away from them. So that's why I'm pulling from the high to high. And so what you'll notice is that, let me zoom in here so we can see this a little better. And what you'll notice is that those computer algorithms, they kicked in, started to buy. You see that big, strong move off of there, comes back again. They're kicking in and buying, moves off, comes back down again. They engage, and we move away. Okay? So if we're going to come back down again, we're going to be right inside of this buying zone for the computer algorithms. They're going to start engaging here at the 32.50 price. They're going to continue to buy all the way down to the golden zone. So we have a lot of reason to believe that what is it? Be right here is very strong support. So between the call it 20, round up, call it 27 to $30 price range is extremely strong support. So if we're going to come down, I find it most likely that this is where we would bounce and reverse, because there's a lot of support here. Let's see if we can find anything else real quick. Let's see. Okay, there we go. So most likely wave relationship for your A, B, projecting the C would be 100%. So we can see that we have right here being the 100% projection for a C wave. So we can bring that down. So there's a lot of reason to believe that this is where we're headed, or where we could be heading before we reverse. So, and that, that could look in the form of a really quick move down at some point today or tomorrow, and then we skyrocket up, or we could just not move down there at all, and it could just kind of come down a little bit more and then reverse. It's very possible. This is just one option that I'm exploring. So now let's talk about why I don't trade corrections. So as a trader, you want to trade smarter, not harder. So trading corrections are difficult. I don't want to trade them because they're difficult to figure out. They take a lot of time to try and count all of the waves. It's just not something I'm interested in. I want those easy trades, those easy setups, and you get those by trading trends. So if you get into, well, okay, so here, right? So we talk about how, if you put in a high, then you put in a higher low, right? So that's going to be the start of a trend, especially if you break a swing, right? So now if we combine that with an algorithm, right? So we're going to piggyback where the big money is. Insurance companies, uh, funds, all these big institutions they trade these, right? So if we know that we're trending, well, I'm going to be looking for is the first measured move, right? Off of a larger measured move. And so I'll jump in right there and, I'll maybe, depending on the situation, maybe I'll scalp out or maybe I'll ride it up. It just depends. But that's why I say riding the trends is a lot easier than trying to trade within all of this sideways uh, consolidation choppiness. It's difficult. I don't recommend it. The only time that it's easy to trade within corrections is if you just have a very consistent sideways channel, right? So you buy the high or the lows, sell the highs type of thing. But those are it's hard to identify whether it's actually going to be trading sideways in the moment. And typically, whenever I'm doing that, I'm only scalping out. So that is more difficult to trade those and to identify. Um, basically, what I want you to take away from that is to make the easy trades. Don't trading is difficult enough as it is. Don't make it harder on yourself by trying to trade assets that are chopping sideways. It just doesn't make any sense. And if you're chopping sideways, you aren't going to go very far, right? Typically, it's going to go up a little bit, chop down, stop you out, go higher. It just all sorts of different counts and just screwiness can be going on. So I stay away from them. It's just not worth it. So for example, here, take a look at this, right? So you're coming in here. Well, what does that look like? Imagine that all this price action wasn't here, right? Oh, look at that. We got a bull flag going, and we're gonna go to new highs, right? We're gonna skyrocket from there. Well, we don't have an algorithm there. To me, this just looks like consolidation. So if I'm going to trade that, and I'm thinking that it's a triangle of some kind, which from here it doesn't look very much like a triangle to me. It does in the shape, but from an Elliott wave perspective, it doesn't. So if I'm going to take a triangle type setup, I'm going to need a very high risk to reward, right? So I'm going to need, believe it's 10 to 1 just to break even over time. So that shows you how reliable those setups are. Now, if we get a setup where here's your triangle, we get a break up, then we get a little pullback, right? So we get something like this, for example. This isn't, I wouldn't consider this a triangle, but just bear with me and just assume that is a triangle, right? So now we get a break outside of it, right? So we get that first little pullback, right? So we get a breakout pullback at a 50, right? We're trading away from the EMAs. It's very important in my opinion because EMAs very often in trending markets, most of the price bars are going to be above the EMAs. So you want to be trading with that trend. So we see something like that. That's a much more high probability setup in my opinion than trying to load up your shares down here. I'll do it sometimes, especially if I think that it's just going to rip and I want to load up on the E wave, then I will. But this is my preferred way of trading a triangle. So hopefully that gives you a little bit more insight from a trader's perspective as picking the easy trades. Don't make it harder on yourself than it needs to be. But I think that's pretty much it for AMC. If you have any questions, drop them down below. Please like this video if you found it helpful, and I'll talk to y'all soon.